Live from Bloomberg's world headquarters in New York City, I'm Matt Miller alongside Sonali Basak in for Kaylee Lyons.
Welcome to Bloomberg Crypto, a look at the people, the transactions, and technology shaping the world of decentralized finance.
Coming up, the SEC, for now, takes a little excitement away from the grayscale ruling. The agency, again, deferring a decision on a spot Bitcoin ETF. We'll talk to one of the companies that's been delayed, Valkyrie.
Plus, we're watching Tether seeing its market cap decline for the first time in 9 months as the overall size of the stablecoin universe contracts for a 17th consecutive month. We'll discuss the slide.
And we'll talk to the former U.S. Consumer Finance Protection Bureau Director, Kraninger, about crypto regulation.
Before we get to all that, though, I want to take a look at the markets because we are watching Bitcoin slide for a second straight day, down about 0.4%. That decline is not across all assets. We are watching Ethereum get a lift about 0.5%. Now, also the Grayscale Bitcoin Trust. Interestingly, Matt, since we have talked about that lawsuit, that court decision here, we have watched Grayscale really fluctuate since then. We are watching them now still narrowing the gap from its highs to, or the most severe, to its net asset value, but we are watching it up on the day, still below the levels of where it was around that court ruling. I want to take a look at Coinbase as well, because this is a firm that has gained 120% in trading this year. However, since that ruling, since some of those ETFs were denied or at least delayed, we have watched the value drop, the stock drop at least 8% since the big surge we saw initially last week. It is hanging out today a little bit lower, about 1% on the day.
Yeah, I thought that decision was a heck of a lot more exciting than you see proved out in the price action. I've got a really cool chart here. I was looking at what has happened to Bitcoin since the Blackstone ETF filing, BlackRock, I'll get it right, BlackRock ETF filing. We've got the excitement up, and then Bitcoin rises up to 30,000, hovers there for a while, came back down. We got another pop here when Grayscale won their appeal against the SEC, but that's disappeared as well. And I was talking to Eddie Vandervalt from the MLive team. He said he thinks part of the problem is there's a shiny new thing in the market that's distracting investors, and that's AI. So I've overlaid NVIDIA's stock price against Bitcoin, and you see that it continues to rise higher even as Bitcoin sinks down below $26,000. It fell back below that level again after the surge last week that Sonali was talking about due to the Grayscale victory over the SEC. But the waiting game continues because the SEC has deferred once again its decision on spot Bitcoin ETF filings.
The news from the Grayscale lawsuit is incredibly positive.
We are closer to having a spot physically backed Bitcoin ETF.
We still don't know precisely what it means.
Anything could happen.
There are still a number of hurdles, a number of milestones that need to be crossed.
There really shouldn't be any further grounds like the SEC has been relying on to continue denying these types of products from coming to market.
October 16th as the next big deadline to watch.
How will this market shake out?
We think that up to 10% or more of all of crypto, specifically all of Bitcoin, should be within an ETF format within the next 5 or so years.
What will the parameters of competition be?
This is about Bitcoin moving from the edge of the investment community to the center of the mainstream allocation space.
This is a massive, massive, massive deal.
We're really at a pivotal moment here for crypto.
Joining us now is Stephen McClurg, CIO of Valkyrie, a specialized alternative asset management firm that also has applied for a Bitcoin spot Bitcoin ETF from the SEC. Stephen, thanks so much for joining us. I thought the Grayscale appeal win was incredibly exciting, especially after the partial win that we saw from Ripple. It seems like the tide is turning against Gary Gensler's SEC, but why do we have such muted price reaction?
Well, Matt, Sonali, thanks for having me. Right now, what people don't believe is that this will actually convert into an ETF anytime soon. There was a lot of speculation on day one, which caused prices to go up as high as $21 a share for GBTC. And now we're back down to $18.50. So just because they won the lawsuit doesn't mean that, number one, the SEC can't appeal. Number two, they could still put them through a process that could take a lot of time to get to a spot Bitcoin ETF for Grayscale.
So have you heard anything from the SEC? Has your company talked to the SEC at all?
We talk to the SEC all the time about a lot of different things, but
I mean, since the appeal win for Grayscale, I mean, since things really seem to be looking up for companies like Valkyrie that have filed.
Well, what I really believe is happening right now is that a lot of the filings were due to either be approved, denied, or move on this week. The SEC was very quick to delay that decision last week so that they would stop the speculation of what was going to happen. So now everything's been delayed to October, and Grayscale is now, we're still waiting to see if they're going to appeal that decision. I think they just want to give themselves some time. Regulatory agencies can't just move on a dime. They need that time.
Don't. Well, we're only days into that 45-day window when they kind of decide what the SEC does here, if they ask for a larger hearing tied to that case or not. But for yourselves, as you mentioned, they delayed the decision here. And October, I'm wondering if you believe that there will be a material movement this year and what that would actually mean for the market at this point.
I would actually give a greater than 50% chance that we get a approve sometime in October. Now, that's probably closer to 50%, but I do believe that at the end of the day, after an approval happens, you still have to wait the 75-day statutory window for the S1 to get approved. So that still puts you 75 days out, but I believe the date is going to be sometime in Q1 of next year.
Have you done the math around how much actual interest this could draw? There was a sense that this could finally draw more advisors drawing their clients into Bitcoin, given the ETF wrapper. But how material could that actually be industry-wide?
Well, it's very material because when it comes to money, mostly it's retail investors that are in Bitcoin right now. And of course, financial advisors represent a much larger section of cash that could go into this, but even bigger than that are the institutional investors, the pensions, the endowments, insurance companies, sovereign wealth funds. A lot of these need a vehicle that they can invest in. They're not just going to go open an account on BitGo or Coinbase. They need a regulated vehicle that they can put their clients' assets in, pensioners, insurance clients, into, and they represent 80% of all capital.
So let's take last week's price movement in Bitcoin for an example. It had gotten above 27,000 and it's now back below 26. The reality is it moved. It was meaningful, but it wasn't blowout. And so if there was an ETF finally approved, do you think that it would draw that much interest, that it would erase the pains of last year?
I think it'll draw 10 times more interest that's in it currently. And that's just, as you say, doing the math on the size of the institutional universe of capital along with financial advisors that manage capital versus what's in there today.
Have you one of the big concerns, even if we don't all understand the logic from the SEC, is market manipulation. I guess that should be a concern in the silver market and the gold market and a lot of other markets that have approved ETFs as well. But have you specifically addressed that with your application?
We have. So
have you changed it at all?
So we changed the application as far as the 19B4, and that's what the exchanges file on behalf of the issuers. We didn't change anything within our S1. We don't need to. It's really an exchange issue. But market manipulation is actually a really big piece. When I used to manage bond ETFs, as you know, the bond market doesn't trade every day. Sometimes a bond will trade once every 3 months, sometimes once a month, sometimes once a day.
It's very opaque.
It's very opaque. And when you're managing bonds in an ETF vehicle, you have to report every trade you made within about 15 minutes. So that is really the part of the manipulation that matters. What's the real price of the bond versus what NAV are we striking for the ETF? For Bitcoin, that's what's relevant here. Are we trading with some OTC desk at some price that's not what the market is reporting? And those trades have to be reported alongside the data that's going to be coming out of what we expect to be Coinbase, which is 50% of the U.S. market or more. So you put that data together and you get true pricing. And we've alleviated that concern through this new surveillance feature that NASDAQ is providing.
In terms of the dream, the great hope of a U.S. ETF. Why is that so important when it seems like a lot of crypto is moving offshore? I mean, investors can buy an ETF in other jurisdictions. Why do we care so much about a U.S. ETF?
Well, there's just so much capital in U.S. markets, period, right? So whether it's, if you look at any ETF, whether it's equities or fixed income, you'll notice that anytime that there's an ETF in the U.S., it's going to capture 90% more flows than it will anywhere else in the world. Canada, for instance, they have spot Bitcoin ETFs, but they're tiny. But so is the entire ETF market in Canada. Same thing in Europe. Europe's very fractionalized. Several different jurisdictions. You've got a list on an exchange in every country. But in the U.S., it's a giant pool of capital that people trust. So that is what will really drive in the capital.
Stephen, great having you in today. Thanks so much for joining us. Stephen McClurg there, the CIO over at Valkyrie. Coming up, former CFPB Director Kathy Kraninger joins us to discuss stablecoin legislation.
And you know what, Matt? Not all parts of the crypto economy are hurting this year. We're going to explain why liquid staking is up nearly 300% in the last year.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
This is Bloomberg Crypto. I'm Sonali Basak here with Matt Miller in New York. Today, Visa had announced plans to use the Solana blockchain for live settlement of stablecoin payments. It comes as Congress slowly moves towards stablecoin legislation that could shape blockchain regulation. Let's bring in Kathy Kraninger, former CFPB Director and Solidus Labs Vice President of Regulatory Affairs. Kathy, if you look at what Visa has done today, if you look at PayPal, how important and how significant is it for these kind of classic financial technology companies to be adopting the idea of stablecoins in this very sensitive time in the legislative world?
It is huge. I don't think we can underestimate that. Look, so many of us in this industry have said we're waiting for the institutions to come, and there is a huge opportunity here to build the future infrastructure of finance. Having a company like Visa or MasterCard certainly is doing a lot of work in this space. And then having PayPal come in. So much of the stablecoin conversation on the Hill started, and in the prior administration started with Libra. And we all know what happened there for unfortunate reasons, frankly, from my perspective, but really looking at what are the opportunities. And I think there was a business decision, too, of we need to start moving. Being the first mover is important, but having legislation, too, is also a key part of this. And I think they just were getting a little, frustrated waiting and said, you know what, we're going to do what we can now to move. And maybe that will help drive policymakers to get the right framework in place.
To your point on Libra, that shows that this is not always so easy to get done. It's been taking many years for the traditional companies, at least, to wrap their heads around this digital currency idea via stablecoin. So what are the challenges that the industry will still face as they try to get this off the ground?
So a lot of things. Certainly a big name does help in terms of household recognition and use and consumers being more comfortable with the fact that there will be disclosures and clarity around the product that's being offered and how it can be used. But look, the term stablecoin without legal definition is one that we've struggled with as an industry. We all think that that needs to be something that's actually backed, one for one, that it is something that is in fact stable. But we have seen collapses, and we've seen frauds and scams in the crypto ecosystem. And that's what makes it challenging to move forward in a way that is clear in terms of what a stablecoin actually must be to be so designated.
You know, when the federal government wheels are slow to turn, we often go to state legislatures. We've seen that with weed, right? Nationally, marijuana is still a Schedule I drug classed with fentanyl and heroin, but it's legalized in at least 23 states for recreational use. Are we going to see that kind of state legislation addressing the crypto concerns as well?
So the states are the laboratory of democracy, and it's fantastic to see so many of them understanding the value between Wyoming and certainly New York. Wyoming instituted their special purpose depository institution regime and was really a leader. New York introduced the BIT license. Obviously, many crypto companies still not enamored with that framework, but it is providing clarity and it is providing an opportunity that goes beyond traditional money transmitter licenses or money services businesses, when many of the crypto companies are really delivering services that are greater than that. So the states are leading the way. And while they're waiting for the federal government or looking to the federal government to put in a national regime, you have California really on the precipice of its own licensing regime. Illinois is looking at it. New Jersey's looking at it. Florida and Texas have attracted a lot of Silicon Valley companies and frankly, a lot of New Yorkers and New York finance leaving to go to Florida and Texas. So pretty healthy regimes there that are trying to balance the innovation and consumer protection and deliver, real opportunity for these companies and for customers.
Are you actually seeing the migration happen? I mean, I know historically, tech has gone to the West Coast, to Silicon Valley. That makes a lot of sense. It's a high tax state, though, and so now we're seeing a lot of companies move, as you say, to Texas and Florida because they're, I guess, in some ways better taken care of in those states, tax-wise at least. Are you seeing crypto regulation pull businesses?
It remains to be seen. I will say leaving the U.S., that is definitely a dynamic. I haven't seen it really in the state migration patterns, perhaps except in mining. I'll say mining companies, certainly with the New York moratorium and with Texas recognizing the benefit of load balancing that they're seeing there. But even in Texas, they're putting some, again, appropriate limits on how that mining can operate, making sure that they are registering with the public utilities and are providing a beneficial part of the energy system there. But the real migration, I guess, that I have seen and our company has seen is from the U.S., certainly to conversations about Europe, what MiCA has done for clarity in Europe.
Well, even if the states were to lead the charge, you think about the incentive. The Wyoming story, for example, with all of the friendliness they've had to the crypto community, in terms of money bought into the state, all of the possible state revenue bought in from the crypto industry was less than $500,000. Do you think that the incentive is there to really rise to the occasion and service the crypto industry when it's not necessarily the most lucrative thing to bring into the state?
It's really about being future-looking and forward-leaning. I think that's where I would talk about it, as well as recognizing that these are fintech or tech companies, and much of their workforce could be remote. So how many really jobs is that bringing locally, or what type of revenue does that bring to the state? But there is a benefit in having a company based there and licensed there and operating from there. And some of the smaller states are definitely looking to take advantage of that. I'm in this industry certainly because I think there is a huge part of the future for all financial infrastructure to be integrating blockchain and integrating crypto. And so that's where I see, the opportunity for those boats to rise in a lot of different locations. And you can attract a workforce and train a workforce in a lot of different places.
Kathy, great to have you on the program today. Thanks so much for joining us. Kathy Kraninger there from Solidus talking to us about stable coins, about state regulation, and really about the moves that we've seen in U.S. crypto firms to go offshore. Right now, we're seeing very little movement, reportedly, for United Airlines, that company issuing a nationwide ground stop on all flights. This, according to ABC News. We do see United Airlines shares dropping now to a session low, down almost 4%. We'll continue to bring you updates on that. United Airlines issuing a nationwide ground stop on all flights. This is reportedly due to a computer issue, according to the FAA. Coming up, liquid staking makes a major comeback despite the so-called crypto winter. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Sonali Basak in for Kaylee Lyons. At one corner of the crypto market, liquid staking is overcoming the crypto slump and nearing an all-time high. Liquid staking offers easier access to the rewards earned when tokens are pledged to help operate blockchains. Bloomberg's Emily Nicole joins us from London with more. So, Emily, what do we know about this and what separates it from regular, I guess, dry staking?
So liquid staking is a way for users to kind of keep access to their crypto tokens, even though they've locked them up on a blockchain. So say you wanted to stake some Ether on the Ethereum network, that means you're going to transfer your Ether to a staking provider or even to your own node and lock it up, meaning you can't access it anymore. But there are certain providers that will then give you a version of that token back that you can then use to trade with or do whatever. And that then means, it's liquid, it's accessible while you're still earning those returns.
When you're thinking about liquid staking and you're thinking about the regulatory pressure that's on the staking business at large, how do you put all of this movement into context with the watchdogs keeping an eye on those moves?
There's definitely pressure on the market, and that's not to be, sniffed at. We've seen, for example, Coinbase, which is the second largest Ethereum liquid staking provider, had some scrutiny over its staking services earlier this year. Kraken similarly, particularly in the US, where there's some concerns over whether or not it's unregistered securities offerings. But overall, this is a global network, a global offering. Lido, the biggest provider by far, hasn't had such scrutiny so far. And how this kind of works in tandem with that is that even though there might be some of this perceived regulatory scrutiny and uncertainty in that side, staking as a whole is generally seen as somewhat more risk-free compared to general crypto trading. You're locking your tokens up and you're getting something in return, steady income coming from that, rather than trying to trade the price of Bitcoin and potentially facing upsides of 5-10% on any given day.
How much of this is, if you talk about Lido, Emily, how much of this is happening offshore?
I mean, it's hard to say. We don't always know, where every node is. And while there are some companies like Coinbase where we can kind of see who they are and where they're based, most of staking is offered by decentralized providers that are intended to be based nowhere, which does make it a lot harder for authorities to be tracking. That doesn't mean, though, that it's completely opaque, but it is part of what makes crypto crypto. The idea that it can be decentralized, that you don't necessarily have to give up who you are or give up your privacy in order to partake in the blockchain networks and earn that kind of income.
All right, Emily, thanks very much. Emily Nicole joining us from the crypto team out of London, talking to us about the liquid staking story. Fascinating stuff. It's like having a savings account that you can, get CD interest from, in a way, to put it in
without the regulations.
Without regulations or the tax implications. A programming note: we are back next week on Thursday instead of Tuesday. That's September 14th. We'll be joined by Blockchain Association's Kristen Smith. See you then. This is Bloomberg.